Episode 5 of The Wealth Show with Equity Kings. Welcome to The Wealth Show. My name is Tumisho Ramodisa and I'm accompanied by my co-host Siyabonga Chuma. Welcome to the show. It's good to be back on the show, and we are recording on the 26th, if I'm not mistaken. Is it the 26th or the 27th, Sia?
It's the 27th, sir.
Oh, yes, the 27th of June. We are heading towards July in a few days. I hope whoever's birthday it was, happy birthday to you guys. But let's just jump into the markets. Let me just give you a quick market update. What happened was during the week, Bitcoin went below 30,000 briefly and then just bounced over 30,000 and just hovering around the range of 30 to 32,000. But I think that this is a head and shoulders, and we might see an even bigger drop in Bitcoin. That's what I'm expecting. The head and shoulders has already formed. It's just up to the market forces to let that shit go down. So Bitcoin is definitely going to crash. It's too soon to say buy the dip and all these other things. And then this week, interesting enough, we got the South African CPI numbers, which was reported at a year-over-year gain of 5.2%. 5.2% year-over-year, if someone can correct me, but that's what I am looking at from the 4.7 year-over-year gain that we saw in the previous month. So this blew everyone's expectations of inflation. But then obviously I read the Reserve Bank's tweet, and then they said that, oh, we got a big increase in CPI for June. But no. This doesn't show us that it's transitory. This doesn't show us that it's persistent inflation. It's showing us that it's transitory because of base effects. So what do these guys mean by base effects? They're talking about the fact that, and I think I posted this on my Instagram, and I think Equity Kings, we did a tweet about it. So you guys can follow us on Twitter at Equity Kings and on Instagram at Equity Kings. But really, what's going on here is they're using the excuse of base effects as a way to say, oh, the base effects, meaning that last year, June, we were deep in the COVID lockdown. So there was deflationary forces, and then we were at the bottom of deflation. And then all of a sudden, it's just a recovery back to the normal post-COVID type of inflation you get. But that's obviously nonsense, because even if you ignore last year and ignore the base effects, and let's look at this year's inflation alone, because we've gone in 6 months into the year, and already, if you count the month-over-month gains, if you just calculate the month-over-month gains, January we had a 0.1 month-over-month increase, February 0.7, March 0.7. So if you calculate all of them up till June, from January till June, we get 2.7% inflation here. In half of the year alone, we've got 2.7% of inflation. Imagine if we continue on this trend, and I think it's going to get even worse. So we might even see at the end of this year 5% inflation. So if we see 5% inflation for the entire year, can you really blame it on base effects because of COVID and lockdown? Because we're only talking about this year. That will prove the whole story that inflation might not be transitory. So I just wanted to talk about that. And Sia, what's your take on the whole situation, man?
I agree with you, but I agree to disagree. For me, inflation is transitory, because my first argument was prices never go down, prices always go up. So inflation doesn't remain the same. Agreed?
Yeah, I agree.
Okay, so what we're seeing now, as you said, if you're looking at the base effect, right?
Mm-hmm.
So as the government gave out stimulus checks last year to try and increase demand of goods, of which we are not making goods, but to drive people to buy goods, which now is a push to hyperinflation when we look at it. So, Tumisho, why are you saying that inflation changes the trend and it goes downwards when the government is out here printing government bonds and then issuing out money to people?
I think the reason why is you have to look at why people say inflation is going to be there and why deflation is going to be there. Because we have to remember, in a free market, right, we have technically in capitalism, we have deflation, because over time prices have to go down because of innovation. It's like, for example, every single time, every single year, things become more portable, and we don't have to spend more money on building phones and stuff like that. So these things naturally tend to get cheaper, which is deflationary. That's what the free market does. It makes things deflationary. So what's happening now, as you said, with QE and the government buying bonds, what they've been doing is printing money out of nowhere, because an expansion of the money supply is inflation. That by definition is inflation, because inflation, you can't inflate. Inflation is an expansion of something. When you inflate something, like you inflate a wheel, you are expanding it, and if you're deflating it, you're contracting it. So prices don't expand, they only go up. So inflation is an increase in the money supply, and the results of inflation, or the symptoms or the effects of inflation, could be consumer prices, could be asset prices going up. It doesn't matter, but it's still inflation. So as I said, we have deflationary forces in the economy, but the thing is, the government is preventing these prices from falling, right? So it's not that we, even if this inflation is transitory, I might agree with you that it is transitory, although I might also point out that it's not. But if we just agree, and let's just say, for example, inflation is transitory and it's gonna stop, like it's gonna stop going up so much and it's gonna go up steadily again. What we can see is prices do go down, but the government counters that by printing money. So it doesn't mean that when the government prints money, prices are gonna go up. It just means prices are prevented from falling, which means that we'll get a slight increase in prices, but we won't get Zimbabwe-style inflation, because Zimbabwe didn't have so much deflationary forces, because it wasn't a developed country. So their deflationary forces weren't as much as countries that are developed, and also South Africa, because I mean we are expanding in technology and stuff like that at an unprecedented rate. So that is deflationary. So the government is merely preventing prices from going down by printing money. So they are countering the deflationary forces, which is good for the economy. And you know what, Sia? You have to ask yourself, why do they do this? The reason why they do this is because they know inflation is a tax. And Milton Friedman always says this. Inflation is a tax on your savings, because I mean, if you save 10,000 rand in your bank account and then it has no interest, because I mean the Reserve Bank basically kept interest artificially low. I mean, it's at 3.5%. If you look at the Federal Reserve in America, it's 0%. If you look at the ECB in the Eurozone, it's at negative. So why the hell would people save? I don't know. People are that dumb to keep saving. So I don't know why they're doing that, but maybe it's because of this mindset that they learned from school that, oh, save. But I don't want to get into that. So you see savings eroding your purchasing power because of inflation. So the government is effectively taxing you, because if the government is taking 24% of your salary in tax, but then inflation is 4%, technically your tax is 28%, not 24%, because they are taxing you in secret. You see, so we have to understand that dynamic, and that goes back to your points here that Milton Friedman always says, and I keep saying Milton Friedman because he's a great economist. He died, unfortunately, a long time ago, but then he's a great economist, and then he says that inflation is always and everywhere a monetary phenomenon. Everywhere. You can't blame it on supply chains and all these things. Yeah, we've seen this mainstream. We've seen this mainstream narrative that says, oh, this inflation is transitory because of supply chains and stuff like that. Yeah, that might be true, but what's causing these supply chain disruptions? It's not because of COVID. Definitely not, because if you look at the capacity utilization ratio, it's at normal pre-COVID levels, which means businesses are producing as much as they should, and they still have enough capacity to produce more. It's just that they're not producing more. But the problem is that the government is giving people free money, quote unquote free money, because nothing's for free. But the government is quote unquote giving people free money, therefore artificially increasing. Yeah,
it's not free. It's not free.
There's
because
nothing.
you gotta know. For every amount that the government gives out, it's got to be recorded onto your balance sheet, and somewhere, somehow, the taxpayers have to pay for it whenever there's a budget speech for the country, somehow taxpayers have to compensate for it. And somehow it's going to make the standard of living tough, because now the government has to cut down on budget due to stupid fucking spending. Sorry for the swearing words, but it becomes frustrating at times. Misallocation of funds. I mean, it's pretty rampant in South Africa. I'm not trying to say we're a phenomenal country when it comes to that, but that's also one things that we can look at which make inflation to keep rising. Because let's talk about corruption and inflation being transitory. Don't you think the more they steal, now it's mathematics, it's got to be a liberal scale, it's got to balance at some point. So obviously when they corrupt and misallocation use of funds and then they steal money, they got to compensate it on the budget speech. So then you see that they have to raise prices, like sin tax, for instance. Sin tax, like in South Africa now, it usually goes up every year because the government is trying to patch. So now you see which it causes inflation to change over time and over time, because now yearly consumers of cigarettes and alcohol do expect an increase in their sin tax, and it always goes up. That's the unfortunate truth, rather. So yeah, though that's my other point, Dumisha, that inflation is transitory. I'm standing with that firmly. Like you to argue with me, however you see it, but I stand with that really firmly, lad.
Yeah, I mean, Sia, you know what I see, right? Why I have two. It's like my opinions on whether inflation is transitory or not is very it conflicts with one another, because I have two. I do believe that inflation could be transitory, but I also believe it could not be transitory, and maybe we'll get this persistent inflation over a prolonged period of time. Why? Is because if you look at the transitory side of the argument, right? There's one key player in this argument, and it's the debt. I looked at South African household debt. It's at an all-time high. You look at corporate debt in America, it's at an all-time high. Look at all types of debt in all these developed countries, including South Africa. You look at the Eurozone, debt is at an all-time high. So debt in itself, if people get into more debt, that is deflationary, because at some point they're going to have to pay back that debt. And when they pay the debt back, they're squeezing money out of the economy and into the banking sector. That way, there's less money in the economy. Yeah, so that is deflationary. So that is a deflationary component or disinflationary component. So there I agree, right? That, the banks, there's another excuse about transitory, or not an excuse, a point, because it's a good point, is because the banks are responsible for 97% of the money supply, which means how do banks create more money? Because banks are the ones that create more money. It's just that the central banks print it out of nothing, but they're only responsible for a small percentage of the total money. So how do banks create money? They issue more loans. So what's happening now is they are not giving out more loans. In fact, if you look at America's statistics, in 2020, bank lending, commercial lending has actually decreased. It didn't go up, it's decreasing. Because why is it decreasing? Because the economy has so much debt that there's more counterparty risk. So that is deflationary, because if the bank isn't creating new money, no one else will. So my argument is, if it's transitory, if it can only be transitory if the bank still controls the money supply. But if the government and the Reserve Bank starts controlling the money supply, then I don't think inflation is transitory. So that's the only thing. So if we see a future where we have unemployment benefits, like the government is going to give everyone free money, quote unquote, nothing is for free. So if these things become popular, what's that other thing? UBI, a universal basic income. If that thing comes to fruition, I don't think inflation is transitory. But if, let's just say, that doesn't happen, and
it won't happen. UBI will not happen, because now, as you say, you're a really big champ of free market. Now, don't you see that as a barrier for free market?
I do. It's extremely bad.
Yeah, because because now if you're gonna be agreeing to your UBS, that means that's bullshit. You have to agree with Bitcoin because Bitcoin is trying to push the same incentive. I'm sorry to go off topic a bit, but yeah, Bitcoin is trying to push the same incentive of wherever you are on the world, the exchange rate is the same, Bitcoin wise. But yeah, so now you are saying because all-time household debt is at all-time high in South Africa, right? You're saying that is causing deflation, so which means that inflation is not transitory, correct?
Yes.
Okay. To hold that thought, so because now, correct me if I'm wrong, I think I picked you saying that paying back debt to the banks is actually slowing down the economy. Agreed?
Yes.
Because a lot of people are in debt. Okay. And with them being in debt, they're in debt and interest rates are like, they are low, right?
Yes.
Agreed. Cool. So now, here's how I view it. We have those factors of, first of all, I disagree with you because debt is something that fuels the economy. Because why does the debt fuel the economy? Because where there is debt, there's a lot of opportunities. Now, looking at it, fine, cool. Here's Jane. Jane has to pay their loan to the bank. Now, the make-up here is that during recessions, if you're not aware of this is the time where large amounts of wealth is transferred to people, okay, like from one hand to the other.
True.
Now, what drives the economy down is when that wealth is transferred and then whoever's got the wealth doesn't do something productive with it, because money or wealth that is not producing more or in some sort of cycle is actually useless. Now, bear in mind, Jane went to the bank, he's owing this much loan. Now, how I view it is that interest rates are low. I believe I'm a fan of high interest rates because I believe that high interest rates will prevent a lot of people from loving debt. Okay?
True.
Now, fuck, my point is getting controversial here. But with them not liking debt because the interest rates are high, it's going to put them into the habit of investing into the economy. Okay? Whereas, let's say, for instance, the government does put the money into good use, hypothetically speaking. Cool, the government takes the money that people invest. Let's say in terms of retail bonds, government bonds, your commodities invested in the country. Cool. Let's say the government is putting that money into good use. That would create more opportunity, which now kills your point of saying inflation would not be transitory in such an environment, Demisho. Because here's the thing, prices don't go down. I don't know, but they don't go down. Now, why are you saying they're going down? Please make me understand. I'm failing to understand.
Let me just try and break it down a bit quickly, but very briefly. So, I mean, personally, I said from the beginning, right? I don't believe inflation is transitory because I believe that the government is going to get bigger and maybe introduce UBI, Universal Basic Income, which I don't support, but I feel like that's the road we're heading for. But what I am saying, if that is not the road we're heading for, and if we forget about stimulus, we stop all these stimulus programs and whatever, yes, we will have deflation because.
But wait, hold that thought. Hold that thought. With the stimulus thing, something really fascinated my mind because looks like I feel like there's financial engineering as to how money works. Okay, so within an economy, you gotta understand money has a period where it circulates in different hands. Okay. And the people here's the thing with capitalism, business people are greedy, okay? This is a fun
But
little story. Because people are greedy. It's just the nature of business. That
but the greed
emotion is.
is good, Sia. The greed
Yeah,
is good.
okay. Listen. The greed and fear. So they have the greed of taking that money and hoarding onto it, as you call Bitcoin hodlers. Business people have a tendency of making their money and hoarding onto their wealth. Hence comes things like recession. Hence I said I feel like it's financial engineering. Because somehow they know that businessmen have got this certain type of fear. And then something happens in the world which will drive those certain businesses bankrupt somehow. Okay, that's a story for another day. But going on to the point that I'm saying, Dimisho, if you look at it, look at periods like in South Africa. Let's talk about payday in South Africa from the 25th up to the 30th. If you
Yeah.
just observe that week, I'll just give you that week, you'll see that there's high volumes of people who drink, there's high volumes of people who eat out. Because you know what? People got money to their pockets and they're spending. So now money is circulating, right? And then
Yeah.
if you look at it, the other 3 weeks is really because I feel like this is where you are separated. 1 week and the 3 weeks, which makes up a month. Because that first week, it's a big threshold of people who are doing 9 to 5s. And the business people look at that 3 weeks to generate their income. Now, what the government tries to do is it tries to give people so that they go and they try and revive the economy. So I think that is part of the stimulus deal. Because we're so against the stimulus. Why don't we look into it and find actually what's
Yeah.
the idea behind it? I mean, we can't really say these people are fully retarded. I mean, they've got something.
They
I
not.
mean, just be open-minded. Okay. That on purpose. Okay, cool. They not. Okay.
It's actually when you think about it, like as you said, you have to think about it outside the box. Like you have to look at it beneath the surface. Because with the stimulus thing, like besides obviously the obvious things about politicians trying to buy votes and all of these things, you have to ask yourself, why are they really doing this? Maybe, just maybe, for I don't know if this is true, but maybe it is. You have to ask yourself, obviously I know the first reason why they're doing this is because obviously I think they want inflation so that the government can bail itself out, but that's a topic for another day. So the second reason I think personally is that they're doing all these stimulus programs, unemployment benefits extensions, moratoriums on mortgages and rents, all these financial engineering that you were talking about, Sia. You have to ask yourself, why is the government doing this? They're not dumb, or maybe some of them are dumb. I mean, who knows? Maybe Cyril Ramaphosa is as dumb as I think he is. Maybe I've underestimated his stupidity or I've overestimated his intelligence. I don't know, but I don't want to sorry for saying that, because I was
Where's
taught to
my
respect my
iPad?
elders. I was taught to respect my elders. So, but on a serious note, we have to ask ourselves, why are they doing the stimulus? Maybe, just maybe, they're doing it as a bribe for something stupid like central bank digital currency or microchips. Who knows? Because if they're gonna give you stimulus indefinitely, forever, I mean, the government wants something. They don't just want nothing. They don't want inflation only. What they also want is, maybe they want the microchip. Maybe they want to control you. Maybe we can run through those conspiracies. But the point is, these guys want something. They're not stupid. They know. It's not in the goodness of their heart to just give you free stuff, quote unquote, because obviously nothing is for free. There's some way or another, the taxpayer is going to have to pay for it, either through direct taxes or through inflation. Either ways, you're going to have to pay for it. Someone is going to foot the bill. It's like if someone just gives you ice cream for free, I mean, someone paid for that ice cream. It doesn't mean that because you got it for free, it's free. Someone paid for it. Even if it doesn't mean you paid for it. Either ways, someone footed the bill, and the government doesn't have any money. The government is broke, as I've talked about extensively in this podcast. But you have to ask yourself, why do they do all these plans? And there's not a lot of criticism about it. I mean, obviously we are criticizing it, but I mean, we still small fishes. So we have to ask ourselves, who is criticizing these people? And like, we have to think critically about it and think, okay, this sounds good. This program sounds good. But I mean, does it really make sense? Does it make economical sense? Because that's what we're trying to do. And what is the effects of it? Because we mustn't look at the intentions of a program. Oh, the intentions, we have to help the poor. Oh, boo. But no, do not look at that. Look at the effects of that. Look at the effects. So, Sia, what's your take, man?
Thing with the economy is very far-fetched and really too deep. Inflation, very interesting. Very interesting, Demisho, in it.
Inflation, it's on everyone's mind. If you Google inflation, you'll see there's so much SEOs and whatever. Like, inflation just pops up everywhere. Everyone wants to know, what is inflation? This and this and this. I mean, the answer is simple. Ask the government what inflation is, because they create it.
Yeah, it's a game. Do you know why they create inflation? Okay, I'm just gonna leave the economic side. I just feel like hitting on a conspiracy here I've got for myself. To be sure, as I say, I feel like it's financial engineering and economical engineering and life engineering, if such terms really exist. Pardon me. Why are they doing this? As you say, they've got an end in goal. And how do they control people? People are controlled through money, because money what? Money drives behavior. Money controls behavior. Money persuades behavior. So they're seeing, in the world we're living in, the world is very competitive. So we have to have something to make all these people abide. And what's that? Money. Everyone abides by the laws of money. We all know that people do things they don't like just to get a quick buck. So now, as I say, they don't really care of giving you money. You like consequences of pumping money. They don't care. It's just paper. As Peter Schiff said, it's worthless. At least with the money, you can like wipe your ass, not like Bitcoin. That's Peter Schiff's answer.
That's my favorite quote. That's my favorite quote. This podcast episode is proudly sponsored by Libertex, arguably one of the biggest forex brokers of the 21st century. Libertex has a wide variety of financial instruments to trade with, from currency pairs, stocks, energies, and even a broader variety of commodities to trade. I personally use Libertex, and the one thing I love the most about this broker is their incredibly low spreads. Libertex has been operating since 1997 and has won over 30 prestigious awards worldwide, and is even a sponsor for Tottenham Hotspurs. So click the link in the description to sign up and enjoy the perks that come with trading with a world-class broker.
Welcome back, listeners. This is the second segment. So inflation also goes, you can use the housing market as a parameter to scale inflation, you know. So here's some latest news feeds. So I'm gonna read an article here really quickly, and then we're gonna dissect it. So Tumisho, as I was saying, I'm like, there's a certain increase of number of Americans signing on the dotted line to get houses. So housing markets is also a big indicator to show how the economy works. Now, if you've read Rich Dad, Poor Dad, or if not, I think I've read this somewhere, somehow, in some business books. But here's the thing. You're all familiar with this phrase, debt is wealth, right? So now let's put this into context. These people borrowed out loans essentially from the banks, right? So we could say the banks are funded by the government in the United States because the Fed has been printing out stimuluses. So, and interest rates are low. Remember, interest rates are low. The Fed is planning
on increasing them on the year 2022. That's when they're planning to take a decision. So at this point, interest rates are low, which means we should expect high numbers of people taking out these home loans. But now, look at it. You have to have people in debt to keep the economy going, which is another principle of the economy people don't want to realize. You don't want to be on the debt side. You want to be on the accumulating side, of which now that's the compound effect. So that's how I feel the equation of the economy is run. It's whether you're on the debt side or you're on the accumulative side. And the debt side is very crucial because it takes your time within that.
Yeah.
So what do you have to say about the housing market, sir?
Yeah. I mean, I saw the numbers. I think it was published this week. Right now it's July.
It's the 1st of July.
It's the 1st of July because the second part of this episode. Yeah, it's the 1st of July. But I saw it this week, right? I think it's Thursday today. But then I saw this and I was asking myself, what the hell is going on with the housing market? What is going on? Because clearly this is a bubble. Because I checked this chart of the Case-Shiller index, right? This is the index that tracks the housing prices. And then if you look at the housing prices in nominal terms, not adjusted for inflation, like just the nominal terms, the housing prices of today far exceed the housing prices of 2007 when the bubble was at its peak. So you can imagine, it's obviously a bubble.
Especially if you check, if you could open up the equities index, you check, it's at an all-time high.
Yeah. You see, all of them are at all-time highs. But even specifically, and what should scare me?
Even Nasdaq, okay, it's having a little pullback, but Nasdaq broke the record again. It's like, and plus so if we look at Nasdaq, it has performed good for the first half of the year. It has performed good gains, of which now is this a bubble? I'm looking at it as a bubble because COVID is not out in the clear. We don't really have a stringent solution as of yet. So the future is still unshaken. Because now we have a new variant. I forgot the strain.
Delta.
Yeah, the Delta strain. It's a bit stronger now. It kills people and those unintended consequences. So the future is yet uncertain.
Yeah, it is uncertain. If you look at it, even if you look at it, I think we're in an everything bubble. The housing market is in a bubble. Real estate is in a bubble. The government is in a bubble. All governments, I should say, the US government in particular is in a bubble because it's going to default on its loans, whether they like it or not, one day. The reaper has to always get you at some point. Like the day of reckoning has to come at some point. But like just going back to the housing thing, and Sia said earlier on, after the ad break, he said that the housing market is a key indicator of this whole inflation thing and whether we have to think to ourselves, how long is this going to persist? I mean, look at the housing prices. It's way higher than it was. Even if you adjust it for inflation, it's higher than what it was in 2007. What does that tell you? You can't argue. If you believe 2007 was a bubble, you have to believe today is a bubble. You can't say today isn't a bubble. That doesn't make sense because the prices are higher. You can look at the charts. So what is this telling us? This is telling us that Biden, whoever it was, they're giving all this cheap debt, and all these things that are happening. It's just I think it's a moral hazard because first of all, the Federal Reserve created this bubble by artificially lowering rates. I think the rates are at 0.25 basis points, something to that tune. It's basically at zero. I mean, 0 and 25 basis points don't really have any difference. I mean, it's nothing. But now, on top of that, you have Biden giving $15,000 home credit for first-time buyers. This is artificial demand for houses. And it's not like more houses are being built. So as the supply stays the same, or even the supply might even be decreasing, the demand is going up. And this is not even real demand of economic growth or people getting jobs and stuff like that. No, it's not real demand. It's government infused demand, because it's fake demand. It's fake. It's socialist demand. And that's how the markets always crash. So the housing market's going to crash at some point. Maybe it might even crash up, because it's possible for something to crash up. Because if it crashes because of inflation, because when inflation, it's like the price of something goes up by, I don't know how many, like 1 million. I remember the Venezuelan stock market in 2016 went up to 1 million points. The Caracas stock market or something like that. I forgot the Venezuelan stock market. When the stock market shot up in 2016, that was an inflationary crash. That was a stock market crashing up. You see, a stock market can crash up and it can crash down. This is something that...
That's good to me.
Yeah, it's new. Like this thing really, it really challenged my head, because a stock market can actually crash up.
Which stock is that?
Look at the Venezuelan stock market. The Venezuelan stock market.
So it crashed up.
Yes, this is what happened. This is what happened, Sia. What happened was 2016, when inflation started running away in Venezuela, the stock market didn't go down. It didn't fall off a cliff. What happened is it shot for the sky. It went up to 1 million points. That's 10 times the value of Dow Jones or NASDAQ. Why? Does that mean people are richer? No, it's an inflationary crash. So it's going up because inflation went out of control. You look at the Zimbabwean stock market in 2008. Look at it, and it actually crashed up. Look at, if you can find, listeners, if you can research and do a little bit more digging, this thing is called a crack up boom. It's when stock markets actually crash but going up. Which means that when it goes up, even though you might think you're making a profit, in reality, inflation is beating that by a dramatic margin. That's why it goes up. It doesn't crash in that case, because it's an inflationary crash. So this is kind of weird. Yeah, it's kind of weird to digest, but it kind of makes sense when you think about it. Because think about a stock market is in a sense, it's impacted by inflation. Everything is impacted by inflation. So if the price of bread goes up in hyperinflation from, let's say in South Africa, 15 rand to, let's say, 2,000 rand, right? That means that the bread price didn't go up in value and you are more richer because your bread price, the price of your bread is more expensive. No, the bread price crashed up. That's what it means. The bread price crashed up. Because that bread, the value of that bread is so expensive that no one can afford it, and no one makes money off of it. So think about it this way. Think about it in a way that stocks or things can crash down and they can also crash up. I think the real estate might be crashing up, because I don't think this bubble will stop. I don't think this bubble will stop. As long as Biden is in office, he's going to make sure he keeps the printing press going and the bubble keeps getting bigger and bigger. He's gonna inflate it. I mean, and then they all act like, these politicians act like they're the saviors of the economy. They're not the saviors. They are the arsonists of the fire. It's like the politicians start the fire and then they act like they're the firefighter, and then they come and stop that fire. That's exactly what they do. And people just fall victim to that. They just like zombies. They just blink into the politicians' eyes and they just say, "Yes, sir, Biden. Thank you for helping us, the poor." But in reality, that's not how it works. So we have to look at all these inflationary dynamics. I mean, we just talked about the price crashing up. We spoke about housing bubble. And because of this housing bubble, this might tell us that inflation is on the rise. Whether it's transitory or not, who knows? We'll have to wait and see. I mean, I still stick to my not transitory. But I mean, even if it is transitory, it doesn't mean that prices are going to reverse. I mean, the prices already went up. No one is going to cut their prices. No one is going to do that. No one's dumb enough to do that. I mean, Sia, would you do that if there was inflation? Would you raise your prices and then end up cutting them because inflation is transitory? No, it just means that inflation stopped going up at a fast rate. That's why people use the word transitory. It doesn't mean it's over and it's going to get reversed. No, even if it's transitory, the damage has been done. I mean, prices already went up. wages have already went up, or not even going up. They went up slower than the rate of inflation. And this rate of inflation is according to the government's inflation. Imagine the real inflation numbers. Imagine that. Imagine relying on the government's inflation numbers to see if you've actually been making real profits or real losses.
The government wants to take 15% out of every transaction that you do in the country. It's crazy.
It's crazy.
You think it's small sums, it's lots of, it's small money that really accumulates. It's a business, guys. Look at it as this. The government is a business and we are the clients, and you are forced to dig into your pocket. You don't
They
know
put a gun to your head.
Yeah.
It's not voluntary. They put a gun to your head.
It's
Because
a
if
gun
you
to
don't
your
pay the taxes, you go to jail. You're a political prisoner. Like
Plus,
Peter's father.
Besides going to jail, you gotta eat, there's tax, you gotta
Yeah.
buy certain products, everything that you do, there's some sort of tax. So you gotta look at the accumulation part of the government. The government has got its finger on every piece of the pie. And that is your pocket.
Yeah.
And then they take that money and they misuse it.
Misallocation of resources. But I mean, I think it's actually important here that maybe in our next episode we should also talk about taxes. In some episode we should really deep dive into that, because I recently discovered something that will blow your guys' mind.
Same here. I wanted to touch on it before, but I didn't. But with taxes, I want us to compare the different types of tax brackets within South Africa and the United States, and the different types of tax laws that we abide by in South Africa and the ones that are the Americans abide by, and we'll find some niches in between and we'll have a fruitful discussion.
Yeah. I mean, it's mind blowing that just someone can just take your money and say it's theirs. Because I mean, they can't just take it away. Say you can't just take taxes away. It's the bread and butter of politicians. That's what they eat. I mean, that's all it is. I don't want to say it's a Ponzi scheme, because someone told me that everything is a Ponzi scheme to me. But I mean, everything has to be a Ponzi scheme to me, because we have to think beyond the box. We have to think outside the box, you see.
But dude, okay, sorry. There's this thing that really fascinated me. Come to think of it, let's think of insurance brokers. You know, obviously they have certain restrictions that they put into their contracts to try and limit risk based on the levies you will be paying them monthly. Now, wouldn't you say insurance brokers are a Ponzi scheme? Because look, they sign up. Let's say they sign up 100 clients, ne? And then all of those 100 clients, each of them pays R1. Okay, it's up to now. The insurance broker has made $100, right? Cool. It hasn't lost anything. The only cost it has is to hire people to answer phone calls, admin clerks, advertising. Okay, those are the costs. But fine. Now they have certain amounts of people which they allow them to insure certain things. Now, the risk that these brokers are taking is that they don't know when certain things is going to happen, but there is a likelihood of it occurring. So now, let's say all those 100 clients, they've been loyal for the past year, and now they need to make a huge claim. Or all of them need to make a claim. Wouldn't at some point, if like, let's say probability, we don't know the probability of life, but if I can think of it, that means there is a possibility of such an odd instance occurring. Okay, so let's say that does occur, where everyone now wants to claim, and then the insurance broker has to pay out and liquidate some of their assets. Don't you see that business model is kind of like a Ponzi scheme?
It is.
Because here's what insurance brokers want. They want to recruit more people, because they know that not everyone is most likely to claim at the same time. Now, looking at that structure, it's Ponzi to me, because they got to keep fueling to get more clients to just keep running and paying out other claims and keeping the other money. Because insurance brokers don't really lose much, because their business model is not giving out a product, but rather a service. And how do they render that service? They need to gather a group of people to make that system efficient. Now, isn't that the nature of a Ponzi scheme?
It is. It is. And I tell you why I agree with you. I think it's actually very rare for me to agree with Sia, guys. So I don't think I'll sleep at night knowing that I agree with Sia.
Okay.
But on a serious note, I think you know why I agree with you that it is a Ponzi scheme, because an insurance, as Sia said, you have 100 people. The possibility is low. There's a low probability, but that probability still exists. So if, for example, in fact, that probability has happened before in history. If you look at insurance companies that have failed, or look at things like AIG, but AIG is very hard to explain because it's all these financial products.
Yeah.
But I won't talk about that. But it has happened in history that an insurance company has, for example, 100 clients and they were all paying R1, and then let's say the insurance company gets bad publicity, right, or something like that, and then all of these guys want to get out, you see, and then the insurance company doesn't have that money, you see. So if everyone claims at once, if everyone claims at the same time, they can't, because they don't have that cash unless they have reserves, which is something different. I think the fact that they have reserves, right, technically by law doesn't make it a Ponzi scheme. But besides the whole reserve story, the business model itself is a Ponzi scheme, because you have to lure people in so that the new clients can help pay for older clients' potential claims. You see, and if an older client gets a claim, a new client pays for that claim. You see, that is a Ponzi scheme. It's the business. Yeah. That's what
it's even like lotto. You see, dude, if I were ever to become the government, here's the thing with the government. As I said, it's a business. If you look at companies like the lottery, okay, like gambling companies, they give government a lot of tax, so that's why the government lets them do as they like. If you look at even the business model of lotto, I would shut down that shit, because I feel like it's useless for society. It doesn't benefit people with anything. It makes people lazy. It makes people think you can get a quick fix in life, which if I could just remove that, it's bugging me. But yeah, so
people would save a lot of money.
Yeah. These are the hidden secrets of capitalism. The law is unjust, and those are the rules of capitalism. They're not written in any book, but they suit the narrative. That's it from me, listeners, for this from this episode. I hope you had an enjoyment listening to our episode. Dumisha, over to you. I'll see you guys in the next episode. Cheers. Have a great one.
Yeah, I think from my side, this episode was really eye-opening for me. I think like this whole Ponzi scheme thing, it's really weird how these Ponzi schemes no one even says anything about it. No one questions it. Everyone just turns a blind eye to it. I mean, the lottery, insurance. It's just that the only reason is because of that reserves, because they have to hold reserves, just like a bank. But without that I would completely call it out as a legit Ponzi scheme, and it must be stopped. But at the end of the day, it benefits some people who were earlier clients. So that's what's happening. It's the hidden, as Sia said, it's the hidden secrets of capitalism, and we just want you guys to be aware of it. We're just helping you become more cognizant of what's happening around you. So thank you guys for listening, and we'll see you on the next episode.